Hello and welcome to yet another edition of the CNBC TV 18 Investment Guide. I'm Surabhi Upadhyay and with me is Nigel D'Souza. Now, Nigel, we've discussed many sectors through the course of the last few weeks on Investment Guide, from banks to chemicals to IT. I thought today we'll pick up a sector which everyone seems to be talking about of late, and I am talking about real estate. Many would say it's the first love for Indians well before the time of the stock market, right? And now it's interesting because numbers seem to be picking up. Companies are giving us positive commentary. But the issue is that is it just some transient passing trend, or is the real estate cycle really turning? Well,
that's right, Surabhi. It's an interesting topic. Everyone's wondering whether or not this is the best time to get into real estate. A few factors that are out there. One is that prices haven't really moved through the roof in the last 4 to around 5 years odd. Demand seems to be picking up. And, when no one's looking at it, suddenly, in fact, real estate sales did pick up. So is it the right time to go out there and pick up your dream home? Well, that's going to be quite interesting. 2021 is going to be crucial because, as you said, there's been pent-up demand. How long will it last?
Dream home or the dream REIT or the dream realty stock?
Absolutely.
We have you covered. So let's start the CNBC TV 18 Investment Guide.
Well, before we invite our guests, let's listen in to some commentary we got from managements on the signs of revival in the real estate space.
Our sales, numbers, which as you know, in the last 2 quarters, we've done about 1,000 crores milake. So we are looking clearly at hopefully a 750 crores plus sales per quarter for Q3 and Q4, and then ramping up to at least 1,000 odd crores per quarter.
There are a number of reasons why I'm so confident or I'm so optimistic about the future of real estate, particularly small homes. See, the interest rates on housing loans are a 20-year low. Real estate property prices are softer today. Many states have reduced stamp duties for a short period of time.
So a lot of the growth and the economic numbers will revolve around the property and construction sectors. And in that respect, one of the best proxies would be, of course, your cements, your steels.
Well, there you have it. You've heard it from managements, you've heard it from lenders, you've also heard it from Jefferies, which has been a big property bull for a while now. Well, let's welcome our experts on the show. We have with us today Anshuman Magazine, Chairman and Managing Director at CBRE South Asia, as well as Murtuza Arsiwala, Director at Kotak Institutional Equities. Gentlemen, thank you so much for joining in. This is a very interesting subject, and we are having this conversation at a very interesting time. So let's start with what data is telling both of you. Murtuza, let me open with you. You've been putting out some interesting reports. What are your channel checks indicating? Is this increase in demand for homes, does it look sustainable to you?
Sure. Thanks, Surabhi. So essentially, some of the data points that we put out on residential essentially suggesting that if I look at the month of September, and it's been an improving trend, you're at about 75% of the sales levels that you saw at the same time last year, which is, I think, a fairly dramatic sort of improvement. Again, it's not all, if you look at city-wise, a city like Mumbai is doing exceptionally well. The MMR region, where sales are down only 3% compared to the same time last year. Launch activity, a lot more weaker. So if I look at, all India launch activity, that is still about half of where it used to be last year. But if I look at, some of the sales numbers that the companies have reported for the quarter gone by, fairly fantastic, given the sort of background where we are in. The world is still sort of coming out, or still not out of the woods as far as the pandemic goes. So fairly interesting times. More importantly, Maharashtra, which gives out more real-time sort of registration data, those numbers look phenomenal, but they should also be seen in the context of the fact that Maharashtra sort of took the lead in terms of reducing sort of stamp duties. And a lot of people are being opportunistic, even trying to take advantage of that lowered stamp duty. So some amount of fence sitters sort of converting sales, some amount of prior period sales, which are probably finding themselves in those registration numbers.
All right, Anshuman, coming across to you, what are the reasons would you ascribe to this kind of a surge in terms of sales? Is it that this asset class was totally ignored? Do you believe that, in fact, people believe that now it's the right time to get in? If you could give us a sense, the reasons, and also Where is the recovery most pronounced geographically?
First of all, there are about 3 to 4 top reasons. Number one, I would say, is that the prices are lower than before, which is primarily because of incentives given by the developer and the attractive payment terms. Number two, interest rates, they're low as 15 to 20-year low after a long time. That has really made a lot of people come into the residential market. Third, I would say that there is government support, be it stamp duty, reduction in some of the states, taxes, tax incentives, etc. So I would say these are the 3 major reasons why people are coming back. There's also pent-up demand. Nothing much has happened for so many months. We as a country still have a lot of young people. The job market is impacted, but not as much. And people in the Indian or Asian mindset, people still feel secure buying houses. So a lot of the pent-up demand has come up because not much was happening for so many months. So that's the reason why we've seen a recent rise. You asked, the second question is that where it is across cities, but in certain categories. And we have seen where, especially the 3 main cities, Bombay, NCR, and Bangalore. But in cities like Pune, Hyderabad, where there's a job market is strong, we have seen recoveries there.
Okay, so that's good to know that it's pretty much pan-India. So Anshuman, hi, and thanks for joining us on the show. Let me ask you the follow-up then. Is this just pent-up demand? Is it just the fact that work from home became a new normal, so people had to rethink about the space they're in? So therefore, is it just transient and it's going to pass away? Or is this looking like durable demand and a durable recovery to you?
Well, I feel it is a durable recovery, but it's going to be at a pace. It will not be at a pace we have seen when last time in 2005, 6, 7, when the market had caught fire. It was really a hot market. I don't think that's going to happen, but this will remain durable, but it will be paced out. It will be, it won't be at a fast pace, but it will sustain as far as I'm concerned.
Okay, all right. Well, Murtuza, let's come across to you. The big question that we're asking right now is the cycle turning, after years of underperformance? What's the sense you're getting?
So essentially, just supplementing what Anshuman already mentioned, there is some amount of pent-up demand in the numbers that we are seeing right now. The registration, duty, the stamp duty reduction is helping. But there were certain new trends which emerged in the quarter that went by. For some of the sort of listed companies that we saw, we did see sales in some of the larger sort of luxury developments, so as to speak. You saw some unit sales come in for Oberoi Realty in 360 West. Even DLF reported a better sales number in the Camellias projects, which are all very high-end sort of projects, so as to speak. You also saw commentary from companies about demand from the NRI segment. Now, that's something that you hadn't heard for a while, probably prompted by the appreciation in the rupee. Also, the sort of social security that owning a house back in your homeland probably brings in, especially when you're locked in a pandemic. So some new emerging trends, but obviously the underlying is that the interest rate environment has never been better. The pricing has been more sort of favorable for the consumer, and maybe an element of fence-sitters sort of looking for that bargain deal to convert what they always aspired to do, is buy their own home.
Murtuza, so let me now start distilling this down to how investors are looking at some of the trends that you and Anshuman described. And let's start with the equity market first, right? Because we've seen this play out in stock prices, and we've seen the big run-up that's happened, the big catch-up rally. Your view on the rally in property stocks, and whether you think valuations are factoring in a lot of the upsides, or is this a party that's just begun?
Sure. So let me put it this way. The economic shock that the lockdown sort of brought with it did see real estate stocks correct very sharply in the sort of March-April period. And the concern obviously with investors was, are we going to see a complete drying up of sales? Now, what is happening is over the past 6 months, those fears have been sort of addressed, because the headline sales numbers do not show the kind of distress that was being anticipated. So in a way, you've had a sort of a recovery rally. And I'd say stocks are sort of factoring in the normal, but are we back to levels which is sort of fully pricing in a full-blown recovery? I'd say not. So stocks are just factoring in what the companies are currently doing. But if we were at a far improved sort of sales trajectory in terms of residential sales, I think the stocks have a lot more to offer. More importantly, the distinction that I'd make, I talked about the sales numbers for the quarter. I mean, there is a distinction between the branded players, and I'd put most of the listed players in that sort of bucket, versus the sector at large. And the recovery for the listed sort of universe is far better than the larger sectoral universe. If I look at the, if I were to, I talked about September being 75% to pre-COVID levels or same time last year. For the listed universe, they were flat year on year. So that's the kind of better sales trajectory that is being demonstrated by the listed or the branded players relative to the sector at large.
Okay, all right, gentlemen, stay tuned. We've only just gotten warmed up. We do need to take a break on that note, but on the other side, we drill it down even further. What about the office market? How is that coming along? What about REITs? And of course, the big question, is this the time to go and really invest in a physical property? The conversation continues after the break.